Hello, everyone. TGIF. Everyone doing okay? Have a decent week? I don't know what's so crazy. Higher Brock. What's a big tell? Higher yields, lower yields. Kevin. Okay. Everyone hear me okay? So Blake was talking about his hesitancy to short the Dixie down here. All right, the dollar, and said if we got back above 97, he'd like the long side. So this is what trader intuition is about. Just like, well, yeah, I know it broke down from the flag and he had different lines than me, but sometimes it's how a market behaves after a breakdown or a breakout. And it takes a lot of time and years for you to, maybe sometimes you're better off just going with it. Sometimes we know too much and we've seen too much. So sometimes the simple things get away from pros. But that was his call, and I think it's pretty viable. We had a nice reversal day after Blake made that call, and right to his number where it'll start looking better. He's going to probably show his trend line there. And on a weekly basis, although we're lower on the week, quite a bit off the lows. So this low is very, very important. This week's low, which is a higher low from about 3 weeks ago. And when I look at different currencies, the euro weekly is, still up, but I think it's kind of a natural for this was such an important breakout that, hasn't even come close to testing that on this dollar rally, this will be the moment of truth around 110 and a half in euro. So if the dollar does rally, get above 97, just guessing, I'm thinking Dixie will be about 98 or so for the euro to be back to the breakout at 110, which is something Steve Volge called when we were down here. Over 110, you can't be short euro anymore. So maybe we get a retest of that. Let me take a couple victory laps. Yesterday, I talked about shorting NASDAQ, and that was this move right here. Um, Maybe it's my fear, or maybe it's just my a lack of patience, but this was a pretty good day trade for about a buck 50. And then the turnaround Tuesday call for this week was I showed everyone Monday and even asked Tracy about it, Shy Girl, if crude could trade back down towards 36, 34, and we got this breakdown of this rising wedge here, right? See it yesterday, and this was kind of a tell. If you noticed, um, the stock indexes after we got this candle about 10 minutes later started to roll over. So when I look at the stock indexes, so this was a pretty good call. It was, shorting in this zone with stops over the high of the move over 41.65. I've taken it already. So next week, if we get some type of bounce in indexes, I think you have to look to be a seller up around $40 if we get there. Everyone with me on that? Here was my clunker. Still with it. In fact, it's interesting. We came all the way back to the throwover twice, but only had one candle closing back inside. Gold looks like it could make a new high. One more push to new highs. Maybe this is just an ABC, something like that, and looks like consolidation. But if you have a daily close back under 1800, that's your first warning sign that we're due for a correction. But it does look like we could make a new high. I'd be a seller up there, and I know it's against the grain of what most people are talking about, but it kind of ties in with perhaps a sell-off in equities uh, and a strong dollar, risk off leading to a strong dollar, leading to eventually gold correction is the way I'm seeing it. And when you look at the S&Ps, this will be the last thing I want to talk about. We had consistently lower lows. I was a seller on Monday. There have been a few trades, but this is why the 3100 level is so important. It's when you go to the weekly chart. Here's your week, you know, um, closing near the lows of the week, although higher on the week, not by much. But getting back under this 3100 level is going to put and trigger the megaphone again. Okay, so look what happened in March. Once we got inside, Rally tried to test the megaphone and crashed. And then we had this one sell off into it, negated it. But 3100 is a pretty important pivot to pay attention to in the S&Ps. And I'm not looking for this, but I don't see why we can't have something like 2700, which would just be a correction of this huge recovery after the crash. So I hope I've helped you guys this week. I help you guys with any of this stuff. And if I did, and you want to thank me, you thank me by becoming a subscriber and joining our community. Peel off some of those pips. And thank you, Brock. And I'm going to turn it over to Blake now. Uh, we're all pretty glad it's Friday. You're very welcome, Stavros. And Blake, how you doing this morning?
Hey, good morning, Coach. How's it going?
Pretty good, buddy. Not bad.
All right. Well, TGIF to
Yeah.
everybody out there. I'm gonna share a few things just because we do have Canadian jobs report. I'm gonna have to go for that
Okay.
because I'm gonna be.
Good instincts on not chasing the downside in the dollar
Huh?
yesterday or the other.
Oh,
Good.
oh,
Yeah.
yeah. Thank you. As far as the dollar goes, this false breakout in the euro really is now a risk, and it's not just the euro. I mean, I'm going to show you a couple of charts that I think are really important here. So you got the euro still getting slammed down below its this long-term trend line. Yeah, you should not be, in my opinion, until we get above 1350 on a closing basis. That's when you look at the euro and go, man, I'm going to get pretty bullish here, and then above obviously the highs, and that's a different story. But as you guys probably know here, the thing about the stock market right now, if you look at equities, and I posted this yesterday. Oh, I don't know if did.
Chart
Oh
of the
yeah, I
day.
did post it. It was the chart of the day, right?
Yeah.
Okay. So if you guys haven't seen this, this is the Nasdaq 100. Let's see, I X
It's
I
like the
C.
beach ball that's holding up everything, Blake. But you know what? The things you're pointing out, and even shorter term TFs, you have a couple of little leaks in that beach ball, I think, starting to show up.
Yeah, yeah. I mean,
Kids
well,
were playing with it on the beach and some rocks cut it. And
there was I just saw a chart earlier today about like the Nasdaq. Some of the hold on, let me see if I can find it really quick. I don't know where it went. The number of Nasdaq stocks that are below their 50-day moving average is increasing. So it's just basically telling you the internals are starting to turn lower for the Nasdaq at this point. So this is the composite. We look at the distance between where we traveled most extended from the 200-day moving average when we sold off. And remember, even at before the sell-off, we hadn't even reached that far of a distance away from the 200-day moving average in the Nasdaq. These extremes are getting greater. So if you think about this, and let me just draw this out really quick. Where's the pen? Oh, the goddamn pen is blue. It's blue. Oh, it's not blue. Okay, so you can see this far. We were this far away from the moving average here. This far. This is pre. I mean, this is before what had happened beginning of this year. Then we started, just flying at the end of, or I'm sorry, the end of last year. We started flying at the end of last year. We got so far extended away from the 200-day moving average. Then we got slammed down below the 200-day moving average even further. And now the rally back has extended the same distance from the 200-day moving average that we are now. So, with all that being said, the market is very extended at this point, and we had a hanging man right here, so I think the risks are building that the Nasdaq actually turns over here.
And Blake, if I may, just look at how much RSI is diverging since January. On the
What's
daily.
that?
Look at how much the RSI is diverging since January on the daily.
Oh yeah. The and relative strength. This is and that was also mentioned on the chart of the day yesterday on the blog. So yeah, I mean it's just,
and you're getting it on shorter TFs too. Besides the daily, Blake, you're getting it on the 2 hour, the 4 hour, the 1 hour, which lines it up.
It does, and I try not to get too carried away with all the divergences because I've seen, you could.
Yeah, you've watched me go broke trading them.
Right, exactly. But I mean, that's just another confirmation that things may be, maybe there. But let's also point out that, we did have. Let's go over to the S&P. Okay, the S&P, we rejected this downtrend line, which is key. The Nasdaq, the Nasdaq 100. I mean, this is a hanging man a little bit too. The Dow 200-day moving average still rejecting it, and you can see the Dow actually is probably
really weak.
It is weak, and this is really a threat. We start breaking below like this little trend line here. It already looks like it's going to roll over. So, you've got. And really it's just the Nasdaq, and it's really just Amazon. I mean, it's Amazon and Apple. And do you think those are crowded trades? I mean,
the generals are retreating while the troops are still out there on the battlefield. That ever happened in
well, actually, I think it's the troops have retreated and the generals are still out there on the battlefield.
Oh, I consider the Dow like the generals. But anyway.
Yeah, well, the generals would be like the Amazon and the Apple. And
those guys.
The rest of the troops that they bailed. So
they're
anyway,
special forces. Like
I guess, but the problem is that you've got these markets that are really showing some weakness other than Nasdaq, and so if that happens, what do you think is going to happen to the dollar? I know a lot of you guys are super dollar bears and you think that the dollar is going to hell in a handbasket, but maybe not so fast. You know what I mean? Not so fast. You got the cable rejecting a pretty big trend line here from 2019. It's the 200-day moving average, right? You got the Aussie stalling at 70 cents. Kiwi it's struggling to break above the 66 cents. It tested yesterday. You got the dollar Canadian that we got the jobs report here in just a little bit, and we bounced right off the 200-day moving average. We're now above the channel resistance. Let me say that again. We are now above channel resistance in the dollar Canadian. If you want to know a currency pair that matches up really well to volatility, this is it. So what the dollar Canadian is telling you is volatility might start to rise, which would be the equivalent of stocks start to come down. So, if the dollar Canadian starts breaking above 136.30 today after the jobs report, we got to pay attention. And here's the thing. I expect the Canadian jobs report to be strong. We're looking to create 700,000 jobs, unemployment rate at 12.1%, both improvements. Well, let's say we create 800,000 jobs or 900,000 jobs in Canada. And let's say the dollar Canadian drops back down to 135.70. Then what do you do? Well, I'll tell you what, if it bounces from there, I'm going to get long and I'm going to stay long, because what is happening here is, if you look at crude oil, or is crude oil hit a new high and then reversed off of that 40 level. If you're looking at the front month futures, it's like at 41 or whatever, but this is a continuous, but you guys get my drift. We hit a new high and then we reversed pretty hard. Crude looks vulnerable. Okay. Risk looks vulnerable. So if you got crude and risk looking vulnerable, then the pairs like the dollar Canadian are at risk of moving higher. Now, another pair I want you guys to be watching today is the US dollar Mexican peso. This looks just like the and if you were on the daily roundup webinar yesterday, you knew this. Oops.
Yeah.
Let me clear that. This is the dollar index.
Yeah.
Right? There's the dollar index. This is the dollar Mexican peso. You see the similarities here?
Yeah. US dollar Mex looks maybe a tad stronger, a little more advanced in it, but very similar.
Well, yeah, because I think the dollar Mexican peso is really going to start to show you a reversal. If we're going to get one, it's going to show it here. So here's the thing, guys. If the dollar Mexican peso shows a reversal above 23, guess what? This dollar index, and remember we talked about this yesterday about the dollar index looking more like this. Because it looked like a bear flag, looked like it was going to hell in a handbasket. But if stocks stop here, guess what? The dollar index is going to reverse. Dollar Mexican peso is going to reverse. And I would not want to be short the dollar Mexican peso, especially if you guys look what COVID is doing to Mexico right now. It's destroying Latin America, right? So, yeah, I mean,
and America.
Yeah, well, that too. Well, I'm winning in Arizona.
Yeah,
winning.
Unfortunately, yeah.
Yeah, we're winning.
I heard a guy say that we could
Sheen
go from
style.
Yeah, I heard that some medical experts said that we could move from it being a pandemic to it being endemic, which I'm sure Steve has the correct definition, means it doesn't go away and it just becomes part of the, flu season annually. It just doesn't go away.
Right. It might not. I mean, we might. I was watching a video of a guy in Italy that I watched some of his videos. He talks about certain things, and he's like an old band member. Anyway, it's interesting because he does like a lot of great photography, and he was doing a video in one of the Italian cities, and it's amazing how the rest of the world has really
handled
the coronavirus. And it's not to say that we won't have a second wave. I believe that we probably will. This fall, unfortunately, the United States is going to just get raked over the coals because we couldn't handle it the first time around. So we're probably first and second wave are just going to be a continuation type of thing, which is sad for those of us that live here because we've been dealing with it already. For so long. It's like I'm going to end up being on lockdown basically for a year. And I'm not happy about that, especially when you're looking around and I was watching this thing in Italy, and watching this video, which was taken yesterday or 2 days ago, and just watching people
live their lives again,
live their lives. Some of them have masks on when they're kind of close to other people. Other ones they'll have them around their wrists, and you can see when they stop and they start talking to people, they'll put the mask back on. It's like, why can't we do that? But no, we're a little different because anyway.
Yeah.
So
anyway, I'm pissed.
Yeah, I'm pretty upset. myself, so I'm just going to stop right
All
now
right.
while I'm while
Okay.
I'm there. Anyway, hey, you guys got to watch the dollar yen too. I was short dollar yen overnight. I had let me take that back. I was shorting dollar yen overnight. I was scalping it through here. I remember when it dropped through 107.15, I shorted it, covered it like 09, and then, bounced a little bit. I shorted again, covered again when it got to 05. I went to bed when it was at 107.05. And it's showing some weakness here. And you can see the 618, we're actually below it. And we're actually, notice how we're breaking these like spike lows through here. So now we're actually putting in some pretty significant lower lows. If equity markets are going to continue to stay heavy, you got to be looking to sell rallies. So, a rally back to 107 is probably going to give us a good opportunity to be on the short side. Some of the guys that we follow on Bloomberg, we follow some analyst groups. They're pretty bearish, and these are all independent guys. They're pretty bearish the yen pairs, and consistent theme is just stay short these, stay long yen basically. And the one thing that you have to take into account, if stocks continue, if they were going higher and the yen wasn't weakening, and there is still that residual buy yen on risk aversion attitude around, then what's going to happen is if stocks correct from current levels, which I think they're going to, then you're going to see some yen strength, which might push us back through 106 and maybe back towards 104, 105 levels. So just my focus right now is kind of on these yen pairs on the short side, and I'm not short them. I want to be short them. I'm just not short them right at the moment. I've got orders out to sell Aussie yen, and they're not getting triggered. And I've got orders to sell dollar yen. They're not getting triggered. So I'm just, I'm trying to sell them. I'm just not getting it yet. Last thing, I'm gonna turn over to Steve. I'm gonna bring him on here in a second. Is this dollar Canadian? Just again, I'm gonna reiterate, dollar Canadian. Probably want to, this is the overnight high. We're looking for. To really be bullish the dollar Canadian, we got to get a close above 136.25. But while we're above, like let's say right about here, 136.60 ish, right above here, this is where you kind of stay bullish while we're above those levels. And then but remember, we got this data coming out very shortly, and it's probably going to move the market. I expect a stronger number, so I expect the dollar Canadian to come down, but I'm going to try to buy a dip on the dollar Canadian if I can. So Steve, how you doing today?
I'm good, mate. How have you been?
Good. It looks like you have, or I don't know if Stelios is in. I know he's still traveling. He's going to be back next week.
Good morning.
Oh, hey, Stelios. How you doing?
I'm here. I'm very well, thank you.
Yeah, of course you are. You're on this
island. Of course he is. His island hopping during the past month. He's going from one vacation location to the next.
He keeps jumping in our chat room, posting pictures, and I think people are trying to figure out how you can block somebody in our chat room like Stelios, and we haven't been able to.
I'll help them.
No, but cool. It's good to have you guys here. Happy TGIF. I'm always happy when it's Friday, even though I don't do anything. But just to have a little mental break from the market is good. So TGIF, you guys, what do you make of the price action yesterday in equities?
Stelio, you want to go first?
It was a bit choppy. I mean, I still see this as choppiness. It's nothing concrete yet, in my opinion. We have to break down. If we go lower, we have to break down and have a few days of continuation. Otherwise, I'm not convinced yet. I'm looking and I'm starting slowly. I did quarter position, very small, just to keep a track on it. Basically at 31.30 in the S&P, and we're at 31.31. So really, it's where I shorted it. Starting very slowly to see how it's going. But I think we're just chopping sideways. I don't know what you think, Steve, but I don't see anything.
The exact same thing. I'm still short, so I would have every reason to want to claim that this is it. Indices are turning lower, and we're going to crash from here. But I think the evidence are not there yet. I mean, yeah, this week we've clearly seen momentum completely wane, and yesterday at some point it was looking like we might actually start breaking down. But once again, while the daily candlestick at some point started looking very, very nasty, they managed to bring in the bid again, and covered quite a few of the losses. And although divergences are all over the place, as we mentioned before, and clearly, fundamentally speaking, valuations are absurd. I mean, who knows? I mean, under this environment, I think we need to see more.
Yeah, and especially like you take like the Nasdaq, right? The Nasdaq. I mean, we looked like we were reversing. We were coming off really hard, and then we reversed to new highs. So, I think one of the first steps in order to see a little bit of a pullback in these risk assets is we need to start seeing, like we are in the S&P. You're starting to see lower highs and lower lows. You got to see that in the Nasdaq, and once you start getting that in the Nasdaq, then I think that's maybe more of an indication that this market is going to come under pressure.
I think we can all agree, though, Blake, that these are extremely tough markets to trade. And
they are.
And they have to say, for people that feel like disappointed, they feel like they have no idea what they're doing or whatever. I mean, it's quite natural. And in this case, what you need to be doing is, I know it sounds annoying, but you need to be patient, because I mean, what has happened during the past few months is that we've had two things happen, and I'm not going to mention the.
Steve,
yeah,
I'm sorry. I got to get hopping.
Absolutely,
I know want to hear what you have to say, but I'm gonna stop sharing. You guys
Absolutely.
have a great weekend. Steve.
You do, mate.
You too, Blake.
Right. We'll cover the data.
All right.
So two things have clearly happened here. First, we had correlations tighten up, extremely due to intervention. So now, as we've mentioned since the very beginning, be careful, because more or less everything has become a single trade, and that single trade, begins and ends at what's happening with risk assets. And on the other hand, what's happening with risk assets, on one hand, it has no backing in logic. The only logic that holds up to any basic test is, I mean, there's central banks that are throwing like trillions and trillions of liquidity, and that's the logic. But other than that, looking at valuations, looking at earning expectations, looking at companies going bankrupt, looking at employment, looking at anything that traditionally correlates, has completely decoupled for stocks to be able to remain well bid. And on the other hand, you have facts, and the fact is that stock indices remain extremely well bid, and no matter if this is going to end up in tears, which eventually will, that doesn't mean that you can't go bankrupt first. So it's a tough trade. It's a tough trade. It's a tough market to follow. But I do think that out of this tough market, we're going to get again some amazing opportunities. But opportunities are there for people that stick around to take advantage of them. So
Steve, the weird thing is that I was thinking today that if a government, like say the US, start being fiscally prudent, that's going to crash stocks, right? Which is insane. It shouldn't be this way, right? The more they pump more money and credit into the system, the more stocks like it. It should be the other way, but anyway, it's a bit crazy.
Yeah, I mean, the logic has reversed in most things, and as long as this is prevailing, things will keep moving in reverse to what logic says, because the vast majority of the market participants know that this is now officially a game of musical chairs. So it's not about what's going to happen in the end. It's about how long is the music going to be playing. We're going to face, quote unquote, the end when that comes. So let's see what we get about data. We have quite a few data. Blake already mentioned what they are. So let's see what we get.
We have US PPI as well.
Yeah, there we go. So
is weak.
PPI a lot weaker than initially expected. We're still waiting for employment data.
Yes.
From
Yeah,
Canada, I
PPI
mean.
PPI is red all across the board, so that's not good. We also, for people who trade Mexican peso, we had industrial production that disappointed quite a bit as well. But Canada, still waiting on that.
Still no data from Canada. Oh, we got them at 950, positive 952.9 versus 700 expected. So
Going into what Blake said. Yeah.
yes, so we're seeing a little bit of a dip here in the USD CAD, but in all honesty, nothing to really write home about. I mean, initial reaction lower in USD CAD is insignificant for the time being.
Yes. Okay. We had a couple of other things. I don't know how my connection is. You and Blake are lagging a little bit, but I know it's my connection. So
You're
if I
good.
lag, let me know. Okay. We had Norway CPI. If you trade the krone, it's important. Came in at flat to projections, 1.4% year on year. Core CPI at 3.1% year to date. That is. So it's not disappointing. It is coming up a little bit. It was down in the last couple of months. Now it's up. It's gone up a little bit. We're talking about risk and equities. I am personally, I said I shorted just a little bit of the S&P. I am personally first going to start. I am already lightening up my positions in Euro Norway, which I'm short, which is risk on, and also in silver, which I'm long, which is also risk on. I will not go down to zero in these positions. I always want to keep some of them, but I am slowly reducing and taking profits before I actually short more of the S&P. Just how I trade it. The other thing, I was reading again in the US, Texas and Florida, new daily highs in new cases and in deaths. This is still very worrying to me. I wish the best for all our US listeners and friends. And it's we still have to be very careful everywhere. Even here in Greece, we've opened up the economy, but really we have to be very, very careful because this thing I don't think is over, unfortunately. And
yeah, you guys are in a position.
Otherwise,
if you
it's
look
all about stocks again.
Yeah.
No, go on.
Oh, Ben. Just that Europe and Greece are in a position where if you get any type of renewal of the infection, it'll be like a bear market rally. It's like it went from everything's an RSI to me, from like zero to or 20 to 80, and yours at least came back down to 20. So maybe the RSI could come back to 30, 40.
Yeah, to be
like a bear market rally in COVID.
To be honest, things are really good here. I mean, we have on average less than one dead person per day.
Whereas all we did was go up and then put in a bull flag instead of coming down to retest the base. All we did was develop for 3 months of our shutdown, which wasn't strict enough with a bull flag.
I think addressing COVID is a bit like trading. You have to be sorry. I was going to say, I think addressing COVID is a bit like trading. You have to be consistent and disciplined. So when things start to flare up a little bit, we have to go back and do what we did before, which we know works. But
there's no political will for it anymore.
I'm skeptical because I can see the beaches here and the islands and everything, and wherever there are people, they just don't care. They're all mixed up together, one next to the other. It's a bit scary, as if nothing's happened. But anyway, just my views.
Yeah, that's the problem, because it's not just up to you being responsible. It's up to the whole citizenry, which you can't count on. You could control what you do, not the rest of the country.
Yes.
Anyhow, right. It's quite a complicated issue.
It sucks.
It is a complicated issue. There are arguments on both sides. I mean,
well, you could say it. It sucks.
Yeah, I do
be in the U.S. right
that,
now. Yeah.
This is not a political comment, although people are very, very sensitive, and they try to take every comment as a political one, like you're trying to blame somebody, or the opposite, you're trying to praise somebody because, you like them or you dislike them. I mean, I say things as they are. That doesn't mean that I'm always right, but I'm definitely not taking sides. I mean, I have no stakes in the game. What I don't understand with how the US handled the situation is that I do understand only two approaches in the situation. Approach number one is the Swedish approach, which is like, we think that it's bad for the economy to lock down. We should more or less continue life as is, taking extra precautions, and it is what it is. It's going to pass. People are going to develop hopefully some immunity to it, and we'll take the consequences and whatever it is. I also understand the alternative, the alternative course of action, which is we lock down everything very early. We make
And
sure
tight.
that and tight, thankfully having to do with the result that happened here in Greece, because we did indeed.
It wasn't voluntary.
No, it wasn't. We made it very, very early, and really we managed within 2 months and almost eradicated COVID, in the sense that, people that are getting sick every day are something like 10 to 15 people. And people that die each day from it is less than one now, which is, for 11 million of population, not bad at all. I don't understand the US approach, because it was neither. You know what I mean?
Right. Yeah,
It was a little bit of both, which both damaged the economy and managed to do nothing about COVID.
Right.
Yeah.
The worst case scenario. And it's because we get things like Sam's writing, read an article saying the lockdown itself will kill 29 times more people than the virus overall.
I've said it before. I also believe that lockdown has consequences. It's not easy to count them, because it's easy.
Who could come up with that number 30 times more?
I have no idea. That's why I'm very skeptical about the number.
But people
because
believe that.
I think it's very hard to count. It's very hard to count. Now, are there victims due to the lockdown? Yes, they absolutely are. Is it easy to approximate the number? I'm not so sure about that. I'm not so sure at all about it. There was a study back in the 80s in the US that proved that 1% of increase in unemployment increases mortality rate, by 0.01%, which means 10% increase in unemployment is like increasing mortality rate by 0.1%, which is a substantial number of people. Now, and that's just due to unemployment. Of course, it's not that you lose your job and you die, but you lose your job, you have less money to take care of your health, your psychological health might deteriorate, etc., etc. So in any case, it's a very, very tough situation, and that is why, the fact that it's a tough situation that doesn't have an easy solution is why it's so negative for the economy, because in essence, COVID is a fact, and no matter how you decide to deal with it, there will be damage to the economy, unquestionably. That's why it makes no real sense where indices are at the moment, because the economic damage is a given. And the fact that no economy is going to rebound back to what it was just within a period of a few months is also a given. And that counts both for, let's take a good example, Greece, that managed to almost eradicate the problem for the time being, or US, which seems to be in the worst situation, having to do with, it doesn't seem to be showing a slowdown. In both cases, the result of the economy is still going to be bad. So, people that don't see the risks, I think they're just not looking, right?
Yeah.
In any case,
I want to mention one last thing before you take over, Steve, and that is cryptos. And we were talking about this for months. We've been talking about cryptos, and I'm not the biggest fan of cryptos, and I don't really understand them enough to be able to, have a solid view on them. But what the Fed is doing, what central banks are doing with money supply, it's turned me bullish in the very long term. A little while ago, after COVID, basically. And I think that if we do see a correction in equities, like we did see in March, maybe not the same extent, cryptos are going to crash. Remember, in March, Bitcoin went down to 4,500, so it halved in price. I think if we do see such a move or close to that, I think Bitcoin's going to be a big buy. And I am personally going to buy some. I know you're going to think I'm crazy, but I think it will be a good opportunity to get along.
I think, Stelio, that with what central banks are doing, anything, almost everything, is going to gain value against fiat currencies. So, I mean, yeah, I mean, I don't disagree. I mean, almost everything, if you look a little bit forward, if you look at the big picture, I think that almost everything looks appealing. If we try to compare it with fiat currencies and the expectations of what's going to happen with them in the future. So, I can't blame anybody really for wanting to buy like, Bitcoin or whatever. Personally,
Let
I'd
me
rather
guess.
take the
Let me
safe
guess.
way. Yeah.
You like gold more than Bitcoin.
Yeah. Listen,
Yes.
Bitcoin might
Was that a
actually
good guess?
Yeah,
Hey,
Bitcoin. Listen, Bitcoin might
guys.
actually overperform. Bitcoin might actually overperform gold by a lot
Yeah.
because it's still not adopted by a lot. And if it gets adopted by a lot, a bigger percentage.
Yeah,
of
it
the
could go to
population,
100,000, like people are saying.
who knows? I mean,
Yeah,
it
that's
might.
what I mean.
It
Yeah.
might. Of course, there is also. I mean,
Doesn't take as much money to move it.
yeah, exactly. As Stelios mentioned, it's not a binary world. It's not like somebody puts a gun in your head and tells you either have to have X allocation in gold or Bitcoin. Make a choice now. If that was the case, you could, in my opinion, the prudent thing to do would be, give me gold. At least I know it's going to be there no matter what. Now, there is always, Mark Yusko in his presentation in Trader Summit spoke about it. There is also the possibility of saying like, okay, listen, I'm going to have X allocation in gold, let's say 10, 20%, 25%, depends on, how you view things.
Yeah.
And, I'm going to spice it up by allocating 2% of my net worth, 3% of my net worth in
12%.
Bitcoin.
Make it equal.
In which case, if Bitcoin really explodes, you'll still get to gain from it, right? It's still going to increase your performance, right?
Yeah.
Yeah. I think personally, there's a friend who's asking, where would you buy? I think Bitcoin has two very big levels, which is 3,000 and 6,000. I will personally be, depending on what equities do, obviously, but I think at 6,000, I'm going to be starting to look to get along some. Not a lot. I prefer gold and silver, but I want to have probably want to have a little bit of that as well.
Actually, if that tells you something, Stelio, we haven't talked about it. My friend Dimitris, who believes in sound money, and he's a market maker in Netherlands. He actually, for that exact reason, he started talking to me about it like last month, and he ended up buying his first, like, I don't know, 6, if I remember right, Bitcoins like 10 days ago. So he was like, what the hell? I'm going to buy a few of them because, everything should soar against, fiat currencies with all the shit that's happening. So he bought gold and he also bought some Bitcoins. Yeah.
Cool. Okay.
Okay. So back to the charts. Speaking of Bitcoin, and since we
have a good weekend, Stel, if you're taking off, buddy.
Enjoy, Stel.
Thank you, guys. Thank you. Have a good weekend, everybody. Thank you.
You're on an island right now.
I'm going to the beach. I will not show video. I will not. Bye.
No. All right. Have a good time, buddy. You deserve.
You suck.
I live vicariously through you. Go ahead. Let's go in the water. All right.
Jack says Bitcoin helps criminal activity and it's owned by crimers. Actually, I have a very good friend of mine. I'm not going to name names. He's on Twitter.
He's a criminal?
Not at all. Not at all. He's a very legit guy. He owns a very big, legit business in the Balkans. I'm not going to go into details. I'm not going to photograph him, so I'm going to be very general about it. So he owns a very, very big business in one of the Balkan countries. Very big business. Huge revenues, etc. But he's also he has also been always in love with trading since he was very young, etc. and he has also built a business that is involved with cryptocurrencies. I'm also not going to go in detail because the point I'm trying to make is another. So we now the two stories tie together. When my friend Dimitris wanted to buy some Bitcoin, he was totally out of this game. I mean, he had never even considered in the past buying any cryptocurrency. So I told him, before you buy any, let me set up a call between, the two of us and that other friend of mine. So he will fill us in any questions you might have or whatever, because he's an expert in it. So we indeed set up a call for a Saturday, and we spoke for a couple of hours. So the first thing he told us is that, oppositely than many think believe, Bitcoin is the easiest by far thing to track through transactions. And anybody that believes that they can actually go through having their criminal activities being paid in Bitcoin is really in deep trouble. And he named several examples of criminal activities that they've actually caught them because they were using Bitcoin and it was extremely easy to trace. So he said that oppositely than many believe, it's extremely easy to track. If you're going through one of the big companies, there's going to be serious due diligence with your bank and everything else. And he told my friend that, listen, if you're trying to buy Bitcoin, through any of the big brokerages and your money is not legit, you're going to be in trouble, and because they're going to check you up and down. My friend makes very good money, 100% legit. So he was like, I don't care at all. But I'm just telling you what he told us. And he gave us, several examples of people he knew, friends, etc. So I'm not saying that he's right. I think he's right because he's a very serious guy and he's very, very aware of the whole environment. I'm just transferring what he says, and I can tell you as a fact that he's an expert. I mean, he has a secondary company, as I said, that deals with cryptocurrencies. I'm not going to go into details because, as I said, this is personal information.
Yeah.
Sam says the same. BTC
anyway,
is very
you're saying-
trackable. It's only the banks and media that say it's used by criminals.
Yeah. Anyway, what you're saying is a guy that has credibility with you. So it becomes harder, you respect him, and he's doing this. So perhaps, it's legit, there's
and
good
even more
reason for it.
importantly, he's doing this more as a hobby because, as I said, the guy owns a very big business that makes legit money.
Legit money? Okay.
I mean, commercial business. I'm not going to go in details. Okay.
Oh, come on, man! I'm going to shine the light on you. Tell me right now.
Yeah, I mean, he was adamant about it. He was like, "Don't believe that you can have any shady transactions because they're going to find you, and you're going to be in deep trouble." He even told us that they have locked his accounts several times because they were looking into the money going in and out. Of course, they unlocked them every single time because the trail of money is 100% legitimate in his case. But just to give you an idea how strict they are, they ended up locking his account several times just because they were looking into them. They unlocked them every single time because they immediately saw that the trail of money is 100% legit. But whenever they saw big transactions initially, they were locking down his accounts. So he said, it's very, very hard.
The exchange, Ziggy wants to know who locked it. The exchange that he trades them on locked his accounts, like BitMEX or what?
I think his bank.
Bank, huh? Okay.
No. The exchange. Let me remember.
Yeah,
the exchange when he had. Yeah, the exchange when he had big transactions from his bank, and then the exchange sent a request from the bank to, to tell them. To verify him and tell them if everything is okay. The bank every single time verified, that the money is legit and everything else, and then they unlocked it once again. But keep in mind, it's not only that they locked his accounts in the exchange, they also asked the bank about it. So as you understand, then it becomes a whole issue, because if they ask the bank and then the bank, can't verify, etc., then it might become a much bigger issue.
Yeah.
Um,
Fraud. Yeah.
exactly.
Yeah. All right,
Okay,
buddy.
in any case, since we were talking about Bitcoin before we move to the rest of the markets, keep in mind, Bitcoin is still capped by this long-term descending trend line resistance. And, within that, we're seeing it coil. So in my opinion, it's going to be soon enough decision time, because let's forget about this trend line for the time being. So, or if you want to make it more clear, let's do it like this. So it's all about what are we going to break first? Is it the blue trend line resistance, support, sorry, or the green trend line resistance? In my opinion, whatever of the two happens first, there's going to be some follow through. If we break through this trend line support first, I think that Stelios might get his chance in buying Bitcoin. First area of support I would be looking for is 7.4, 7.3, 7.4 thousand, and the one below that is at 6,000. So he might get his chance in buying at 6,000. Alternatively, if we break through this, let's say 10,000, 10,500, if you also want to be safer and say, you want to see a higher high other than seeing this trend line resistance breaking, I think you might not get the chance of buying it at 6,000. As simple as that. So, that's all that needs to be said about it. Now, having to do with the rest, nothing really has changed since yesterday. A lot of people, once again, I was looking at my stream, a lot of people started trying to call, the top in gold and silver, because at some point yesterday, the daily candlestick in stock indices were looking quite nasty. The same thing was happening with the candlesticks in gold and silver, especially in the case of silver. The candlestick wasn't only looking nasty during the day, but to be very fair, it also closed at a very negative way, because we first ended up testing this area of resistance after clearly posting a new high and testing the $19 area, but we also closed very near the lows. So, what was left behind was a potential reversal candlestick. And to be fair, this interpretation has not yet been invalidated, because today's high, although we're seeing, silver being bid once again today, today's high has definitely not invalidated yesterday's high. Having said that, and going outside of simple candlestick interpretation, if we want to talk about technical analysis, what happened yesterday is, yes, we had a move higher from this triangle, and we ended up closing the day back, testing the broken trend line resistance and support. And so far it's holding. So from a technical analysis perspective, especially as long as we remain above, on a daily closing basis, above, let's say, 1830 to 1840, there is really no evidence to say that's it, silver topped. Yeah, you have a single daily candlestick, which, coincidentally, as I was mentioning a few days ago, we've had plenty of reversal candidates from daily candlesticks, and most of them didn't work at all. Some of them produced very limited follow through. So, do I think you should be selling silver? Depends. You can sell it here and put a stop loss above yesterday's highs, and even if you're wrong, you have a very, very limited risk exposure. On the other hand, personally, I'm not looking to sell it, so I'm just giving you the two options. Now, having to do with gold ended up yesterday producing what? An inside spinning top. So the epitome of an indecision candlestick. Does indecision mean reversal? No. Indecision can mean a potential reversal coming, but it can also mean the metal taking a breather before it continues higher. What do we have so far today? We have an inside pin bar to yesterday's inside spinning top. So another indecision candlestick. So, should you be calling a reversal here in gold? No. It's too early. Yeah, evidence is very scarce. Okay. So, in my opinion, don't keep looking for an excuse to just short them. Yeah, they might reverse lower. They will reverse lower at some point. But especially looking at gold, I see no technical evidence here whatsoever. Okay, so you want to feel more comfortable in doing it, just at least wait for more evidence, which isn't there yet. Now, yesterday's candlestick, if we take the benchmark for risk, which is S&P, and let me zoom in, what did we get yesterday? We got a pin bar. What is a pin bar? Pin bar is an indecision candlestick. What do we have today so far? We have another pin bar, actually an inside pin bar to yesterday's pin bar. So more or less, what you see on gold, you see on the S&P here, right? Yeah, yesterday's candlestick looked like it could end up being very, very nasty. Was it? Not really. Is today's candlestick so far showing anything different? No, it isn't. So, until proven otherwise, the path of least resistance remains high, and we might actually test that 30 to 60 area. Okay, as long as there is so much indecision having to do with the most basic players of the game as we speak, which is risk assets and metals, because the market, let's be honest, is mostly focused on what the two of them are doing at the time being. How can you call what's going to happen with the dollar? It's impossible at the moment. Yes, the dollar index, if we want to begin by the dollar index did reverse higher yesterday, undoubtedly. Is it bullish yet? No, it isn't. I mean, it's still below this broken corrective channel. Can this prove to be a false breakout? Can this prove to be a different formation? Yes, it absolutely can. But, is there any strong evidence about it? No, there isn't. So bottom line, I mean, it's very tough to call what's happening here in the market. It's very tough. It's not like, I lack the knowledge to help you out in what's happening here. It's like, even if you listen to interviews like from, some of the biggest hedge fund managers in the world, the situation currently is extremely confusing. It's extremely confusing, and the markets are confused. I mean, the price action, whenever you see the technical picture being so messed up that possible interpretations more or less include everything, that shows you that the market is very, very mixed, and the market participants are really undecided. And
Great
something.
point. That's a great point.
And something, you have to go with it. There are periods of time that everybody's confused about what's happening. I mean, blaming yourself or trying to find an edge that will make you certain about direction in a market that's totally uncertain, it's like, yeah, you might, if you persuade yourself enough, you might convince yourself that you're certain of what's about to happen. But in my opinion, currently, it's the same odds like, tossing a coin and being 100% certain before it lands that it's going to be heads.
Your edge is recognizing that environment and doing nothing until it changes.
Yeah, that's what we have to do.
But a lot of people can't even recognize it. They think it's them.
And something,
the markets.
Half of those people are going to be claiming that they're gurus at the end. Because, of course, when you have 50% chances of being right, half of the people are going to be right.
Yeah. Okay.
In any case, let's...
Good week, Steve, if you want to wrap it, or it's up to you.
Let's go through a couple of questions, and then sure. Emmanuel says, the big banks gave trade calls to their clients to buy gold since March. Goldman Sachs and Bank of America in March gave a target of 1,800. That target has been achieved. So I think we may see gold ranging, but I don't know of silver. Yeah, that's actually a good point. Although, to be fair, banks are very frequently wrong with their calls. That's one point to be made. Especially Bank of America is kind of, okay, there are worse cases anyhow. But I can tell you one thing for sure. We've been calling that something is happening with gold, and it looks very bullish since it broke through 1360. And to be fair, the environment, even though we reached the target you mentioned at 1,800, remains extremely supportive for precious metals, and that is something that needs to be said. Having to do with another question that has to do with platinum. Whoops, wrong place. Let's open it here. So, having to do with platinum, platinum first of all, has broken through, I mentioned that yesterday, has broken through what was clearly a corrective formation. I mean, you can't get a more textbook correction than this one. It took so many days of so much overlapping price action to retrace a fraction of, the move higher that we saw earlier. Now, yesterday, as gold was reversing lower and silver was reversing lower, guess what? Platinum did the same thing. And what it left behind from, on the daily chart was this outside spinning top. So quite an indecision candlestick. Now, I'll remind you, or those of you that weren't here yesterday, I'll tell you what I said yesterday, which was the following. We've broken through this formation, which is a bullish development. On the other hand, I said very clearly, and I had mentioned the same thing before we tested it earlier in May, that 875 is a very powerful confluence of resistances. So being close to 875, despite having broken this bullish formation and despite remaining in this ascending channel you see in red, I don't think there is any risk reward in buying it. I would gladly buy it above 875. I think a break above 875 is going to be a very bullish development, and it's going to have a very high probability of producing follow through. But I think you should be careful close to 875. Okay. USDX will be destroyed soon. Now, soon, soon is a relative term in the markets. Original cryptos are deflationary assets, unlike fractional reserve banking that decays your savings. Listen, my only argument with that sum is the fact that if you take in isolation any cryptocurrency, for example, Bitcoin, you can make that argument and you're going to be 100% right. The problem being, though, that there is absolutely nothing that stops people from making 1 million of cryptocurrencies, right? And at some point, this was looking, quite ridiculous because, during the boom, we've had thousands of, currencies and shitcoins emerging. And now at least Bitcoin has really proven that it has dominance. I think that now it's the allocation to Bitcoin among cryptocurrency holdings is something like 60-something%. So now it's much easier to focus on Bitcoin because it seems to have prevailed and created the network effect and everything else. But if we had this conversation, especially a couple of years ago, it was
there was no
quite...
institutional support back then.
Yes. Let me see if we have any more questions.
Although when I was in an institution, I still supported it. I said, yeah, if you like it, go ahead, do it. So that was my support.
Yeah.
Sounds good. Let's do it.
So there is a question also about WTI.
I answered that already.
Oh, you did? Okay.
Yeah.
Having to do with WTI, I want to go on the 4-hour chart. I mentioned specifically yesterday, I mentioned the following thing. Yesterday I was saying that this ascending wedge, depends on how you draw it. Something like this, like slightly ascending wedge, something like this.
I mentioned like yours better than mine.
Yeah, I mentioned that this ascending wedge, or this ascending wedge, if you want to look at the bigger one, they were not steep enough, which left very likely the possibility of going through it and then testing 42 and above 42. I mentioned that the next area of interest was at 44 something before we see lower levels. Yesterday, we actually reversed. To be honest, I was quite surprised because I had started believing from this price action that the chances were looking better for a break higher than initially before moving lower. Because if you remember, I've kept advocating that this is not the place anymore to be buying crude. I said many, many times that from a risk-reward perspective, I think that crude is not a good buy anymore. And if you want to really buy it, you need to wait first for a deeper corrective move. Now,
You know what
we
was the
did.
tell, Steve? It wasn't making new highs, could not take out that June 20th high or so at 41.60 with risk on fire. It could not take out that buy stop over that high.
Yeah, although sometimes you might see a little bit of lagging, and then you might see a move higher. Irrespective of that, we've now broken through both of these formations. So this is definitely a bearish development. Now, does this mean that the move lower has begun? No, it doesn't. But it means that crude is now technically vulnerable, which means the following. If within the next few days we do indeed see a risk sour and move lower, then you can expect crude to accelerate to the downside. So from a risk reward perspective against the highs, especially now that we've seen a decent rebound today, I wouldn't blame anybody for trading crude, short.
Yeah.
Personally,
Back at
I've told you
40 or so. Yeah.
yeah, personally, I've told you that my preference is to buy crude lower, ideally at $29. Ideally,
Mhm.
but as I said, I think it's a viable trade. I mean, we did have a technical breakdown yesterday. We're now decently close to the highs, so it is a viable trade to be short here now that we've seen some recovery today. And last but not least, because we had this question also during the week, which I didn't have the time to mention it, there was a question about the Nifty and Nifty banks, and I will very briefly say here. I wanted to do it on the
Colin,
daily.
you're very welcome.
So here's Nifty banging its head on this confluence of resistances. You can see it here: 200 DMA, horizontal support resistance area, just a slight overthrow from this ascending wedge. So be very careful. This is a huge area of resistance. And here's the Nifty banks that you asked. Nifty banks,
It's worse.
yeah, much worse. And guess why it's worse? You remember how long ago? Exactly. You remember how long ago I was saying, stay away from the banks. The banks are really done. I mean, there is no win situation for the banking industry. I mean, there are two alternatives. Rates go higher. What happens in that case? Their balance sheets get destroyed because anything they currently have as collateral, if with so much debt and so many problems in the economies, if rates go higher, what banks currently have as collateral is going to go bad. Not all of it, but a huge part of it. So they're going to be bankrupt. Of course, they're going to rescue them, but they're going to be bankrupt once again. What is the alternative? Keeping rates to zero forever. Of course, put forever in quotes because nothing lasts forever. Okay, so what happens with the profitability model of the banks with rates being not only rates being zero, but in essence having more or less a flat curve? They can't make any real money. Okay, so there is a saying in Greece which says "Bros gremos και πίσω ρέμα," which I think the alternative is you want to die by the by a knife or by bullet. More or less that's the situation about banks.
Both.
Yeah, whatever. That's the situation about banks. There is no escaping the fate of banks, which is best case scenario, they're going to just be surviving.
So you're a little bit negative on the banking industry.
Yeah. So yeah, if you had to sort the Nifty or the Nifty banks, yeah, you would sort the Nifty banks, obviously,
Yeah.
right?
Yeah, it's the same here in the U.S. XLF, which is a banking ETF, pulled that up compared to the S&P, and it's a universal theme.
What did you
On
say?
every XLF is
There you go. Yeah.
Same
quite
thing.
quite a complex correction here.
Yeah.
But yeah, this seems to be about
Even
to go
weaker. Yeah.
Yeah, this seems to be about to go bad as well. I mean, from a technical perspective, you see.
Yeah.
Yeah, in any case, Dale, have a wonderful weekend, and everybody else.
You too. A very nice thank you from Collins. Thanks for doing this every day, guys. We all really appreciate you taking the time to educate and discuss markets with us day in and day out. You're welcome, Colin. If you're not a member, subscriber, that's the way you could thank us by, if you like this, you haven't seen anything till you get into members chat. So everyone have a great weekend. Remember, don't just count your pips, count your blessings. Tell the people you love that you love them. They're not mind readers. And we're going to have another great week next week. I have a nice lineup for us, and the team will be here laying it all out on the court every day because our mission is to build up and edify traders every day. Enjoy the weekend. Thank you, Steve.
Thank you, Dale. Bye-bye.
Adios, everyone. Join the family. See you later.